Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business need to ask themselves? Are we growing wealth or are we losing wealth? And how do we measure this? Gold is that tool. To this point, a significant reason to consider investing in gold lies in the current economic climate. When governments struggle to balance budgets, they run massive deficits to compensate for a lack of central bank support. The end result will be a rise in fiscal dominance. With the eventual pivot by the Federal Reserve, there will be a return to low interest rates, which would set the stage for a destructive economic scenario. In this video series, we will give you 10 reasons to invest in gold. There are far more to list, but these reasons cut to the core of gold investing. To learn about all 10 reasons right now, see the link in the video description to read the full article. When weighing the cost of living, inflation, interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. If you think that you may be falling behind, see the link in the video description to access the free inflation retirement calculator to make sure that you are on track. Also, be sure to stay until the end of the video, where we will give you 2 sound investment options, each with their own set of advantages. Reason number 6, government budget imbalances, fiscal dominance, and interest rates may cause hyperinflation. The mechanics are simple yet alarming. Governments, in their quest to stimulate economic growth, often resort to printing more money. If they can't borrow more money, they run massive deficits. This action invariably leads to devaluation of the currencies and potentially hyperinflation. This is where gold comes into play. Here are 3 strategic reasons why gold becomes a solid investment option in such a scenario. Hedge against hyperinflation. As the value of the currency diminishes, the value of gold tends to rise, preserving the purchasing power of your investment. Store of value. In times of economic instability, gold serves as a store of value. Unlike paper fiat, central banks cannot print more gold. It retains its value as paper fiat currencies backed by faith diminish in value. Fiscal dominance. There is a tipping point where monetary dominance shifts to fiscal dominance. The Federal Reserve can, to a certain degree, squash the demand side of inflation, but the supply side that is presently being driven by massive government spending and deficits is largely out of their control. Essentially, the U.S. central bank, along with the smaller private banking sector, is slamming on the economic brakes as the federal government is jamming on the economic accelerator. When the Federal Reserve is forced to pivot and stop its monetary tightening and resume quantitative easing, that is where inflation has the potential for resurgence at a more extreme, possibly violent rate. The Federal Reserve will have no choice but to step in to monetize the debt in order to prevent a sovereign debt crisis. Also, with the debt to GDP ratio presently over 120%, the ability for the U.S. economy to grow its way out of its debt becomes more and more challenging. Reason number 5, derivatives. How could an unstable derivative market affect the larger stock market and, as a result, the price of gold? This is a subject not many people within the financial sphere are addressing and could be the black swan that tips things out of balance. Derivatives, often dubbed as financial weapons of mass destruction by experts like Warren Buffett, are causing significant disruption within the financial markets. The derivatives market alone currently represent an alarming $1 quadrillion, which is 16 times the world's GDP. Yes, quadrillion with a Q. This massive potential financial bubble is a ticking time bomb, and its explosion could result in the entire financial system's bankruptcy. To this point, if this volatile scenario were to play out, gold offers an investment sanctuary. Gold's inherent value and historical resilience makes it a safe haven asset, offering a hedge against fallout of a potential derivatives crash. Gold is a tangible finite resource that is not subject to the same risks as derivatives, which are essentially contracts based on hypothetical scenarios. When you invest in gold, you are investing in a physical asset with intrinsic value, not a piece of paper that relies on someone else's promise. The unstable nature of derivatives make gold an attractive alternative for diversifying your portfolio. Its price is not directly correlated to the stock market, which means it can provide balance in times of financial instability. Moreover, it's a globally recognized asset, providing you with liquidity in times of crisis. While the derivatives market teeter-totters on the brink of instability, gold stands firm. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. In our next video, we will discuss numbers 3 and 4 on our list of the top 10 reasons to own gold. Be sure to like and subscribe so you don't miss it. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.